Hi, everyone. Thank you for joining us today. Today we have Devin Daly from True, Mike Metz from VIP, and our very own Tom Colucci here to discuss shared confidences, why trust in AI-derived loan data will increase liquidity and competition in the mortgage industry. Thank you guys so much for joining us today.
Thanks for having me.
No problem. Throughout the webinar, if anyone has any questions, please feel free to drop them in the chat and we will have our panelists answer them. And yeah, we'll go ahead and get started here in a moment.
Don't be shy out there today, friends. We want your questions.
So I know our first topic, big question on a lot of people's minds is, what's changed in technology to give mortgage originators a new level of confidence in the accuracy and completeness of their data?
You want me to start with that?
Go for it.
Yeah, sure. I think for me, there's really three things. And I think first and foremost, I always look at technology as a tool for human beings, right? And the hardest thing to change is it's not the implementation of technology, it's getting the humans to change their behavior. So I think the tools around getting ops staff comfortable with the results of document classification and the results of data extraction, that's really meaningful, right? And that takes some time. You got to factor in 30, 60 days. You got to factor in who's going to be my champion, who's going to be my reviewer. So I think, if you look at this, if you've done some of this technology in the past, there have been cases where, hey, if you're recognizing 70 or 80% of your documents, that's still success. But your ops staff is still seeing, that 20% or 30% of those documents that they have to review. Now, granted, the results are a lot better today, but the opinions of the past are still lingering. So we need to have those better tools to show them that, hey, we're getting really good results. And not only are we getting really good results from the classification, we can actually extract the data in a really meaningful way and then layer tools on top of it. So before you layer those tools on top of it, you gotta prove the classification and extraction of results are accurate, highly accurate.
I have a much lower tech answer on that one. And I mean, if you think about our industry and what we've been in, and even just the past 10 years, you've gone from the stereotypical loan officer took the loan application on a bar napkin and churning that in and hoping the processor can read their handwriting into, online applications where already now you're getting a lot better data input in the first place. And now we're getting more sources of data as we collect more documentation, but we're also getting third-party documentation now from verifiers as that tech builds as well. What I don't think we as an industry have done as well then is kind of adapting to that. Whereas before you were doing a lot of that checking, but now you have almost too much data and we're not cross-validating that. The address, for example, appears probably like 8 different places on the file, the actual residential address for someone. Are you checking those 8 against each other?
Yeah.
Theoretically, you probably are. Your people are trained to theoretically do so, but if my processor, Tom Gallucci, had a late night out, he may have meant to check the bank statement address against the pay stub, but his eyes may have gotten a bit blurry when he started looking at street and didn't see that it was actually road. And no one figures that out till too late in the process. So that's where I think now the tech is finally getting to the point where it can help us do that job. And, people complain about, oh, is there going to be a computer replacing my job? That was a job you didn't want in the first place.
That was a job you didn't want in the first place. And now the technology, it's really ideal with technology to do that cross-source validation and tee up those exceptions so that you as the human can use your brain to how to figure out how to resolve them.
Exactly. I mean, piggybacking off both your points, we talk about this a lot lately. And how do you leverage technology, particularly automation or AI machine learning tools, to handle more of those mundane tasks or repetitive tasks that you can then redeploy your best talent towards? Maybe it's more customer facing items. You're really enhancing that consumer experience in parallel with the technology that you have at hand. And, Devin, going back to your points, I think of, just the enhancement of data extraction going back from the early days of OCR technology and scraping and extracting through the fields of your system of record. And to your point, you're getting 60 to 70% accuracy, and that is a success, but you're still having to leverage your team and spend their time to go back through that. Or to Mike's point, if there's always going to be that element of the human error there in checking and rechecking. And while we've got more layers of technology to support, it's not necessarily improving operational efficiency if you're still having to have, your teams constantly re-verifying the information, that your technology platforms are extracting and replicating throughout your system of record.
A good point.
And one thing I'd add on there too, I think just the, Chat GPT is the buzz of every industry of late. And, I think it scared everybody to death at first, but as you start to understand and think through more practical use cases of where automation AI is actually being leveraged, think of like your texting or emails and, the predictive dictation, finishing a phrase or a sentence in there. I mean, that's a form of AI and automation already at use in your daily life. And I think that helps break down those barriers for people too, and start thinking through forms like Chat GPT of, oh, wow, how can I creatively use this technology to better my daily processes and make me more productive?
Yeah, I think one of the things we'll have to work on as an industry is, now that we have this rich source of data and it's clean data, and the data is broader than just the data I have on my application, what else can I do with it, right? What other applications of artificial intelligence, maybe predictive analytics, how can I use that to come up with an ideal customer profile and do more intelligent marketing, or identify customers that I need to pay more attention to during the origination process to have that great experience? Those are the real values that are going to come out of this when we start investing in, going deeper with the new data sets that we have.
I think that's a good point, is what do you do with next? And I think that's something that our industry also has not done as well with, is you've got a lot of this extra data available now from these documents. What are you doing with it? And I'll put ourselves in that one. I won't speak for others, but the answer was nothing. You record the data that the client produces and that you put in, but you're never even recording a lot of that data that you're getting off the other information. And that really lets you zoom in on who your client is. What problems do you need to be ready for? So, are we deficient in our insurance coverage X percentage of time? Is it certain loan types? Is it certain states? Is it certain loan programs where I tend to have that insurance come in with low coverage or high deductible? We never record that in the system, not until now we've started playing with that, where, all right, let's have the computer grab that off and put it in. And now you can start to do that analysis and try to get ahead of that, of where are we likely to run into problems?
Yeah. That example I gave you earlier, Mike, on the other end, on the front end, right? The data I experimented years ago with the ideal customer profile and getting loan officers, there's some of them doing 20 or 30 pre-quals a month, but they don't necessarily know who to follow up with. And so coming up with a score for them, right, based on forward predictors, right, when we do this predictive analytics, the challenge was, one, getting loan officers to change their behavior was a challenge, but two, one of our key forward predictors, right, one of the elements that's going to say, hey, this is going to be a great customer, this one's really likely to close, was, did I open up a trade line in the last 6 months? And that wasn't data we had access to through our LOS. But we did have access, it's on the credit report, but you have to read the credit report. You got to get the data. You got to do something with it to put it in your model. And now we have these tools where we can go out and grab that when the credit reports run. Just what are we going to do with it? And am I going to delight my loan officer by telling them, hey, I know you did 30 pre-quals. You should follow up with these 10 people. You can ignore the others, right? Doesn't sound like great customer service, but it does sound like I'm going to close more loans.
Yeah, that's what it's all about.
Well, or even thinking in this environment too, where cost to produce a loan has never been more expensive, and lenders are looking at every way possible, not only to improve their operational efficiencies, but also reduce the overhead on a cost to produce a loan. Your pre-qual example, or applications that don't make it to funding, are there predictive analytics that we can leverage, as far as collecting data or creating those insights that maybe save you on different providers you use and not sending, that information into a loan application phase that has a highly unlikely probability of ever hitting the closing table.
Exactly right.
Yeah. When it comes to confidence in technology, how can this be tested by the secondary, correspondent, or wholesale markets?
I can go on that one. The way we implemented this one, so I mean, we had a very young correspondent channel when we started talking to True and implementing on that one. And we had a poor person position where they were going through the closing package, which sometimes it's several hundred pages, and extracting them manually and separating them out. And that was kind of a new role for them. So we put in a little question for our team, just kind of checking to see how valid a job they were doing. And then did the same thing after we implemented True, just on the data extraction part of it, because we always go with crawl, walk, run. So even before we take the data extraction, just can it go through a package and separate the documents correctly and into the E folders? And no surprise probably to Devin over there, the computer outperforms the person. So, first we just tested it one step. And I don't know how many of you on this call have actually started playing with it. This was all space age technology to us. We didn't think we had the possibility to use technology like this. And this was safe for like Wells Fargo and US Bank to do those kinds of things. Until we learned that's not the case. So, I mean, that's where we were asking, well, what do we do? So we started doing on just certain files and seeing how those performed, and then kind of did that next level of, okay, well, now let's do some data extraction and see how it does and check it over at each individual file to start, but then start spot checking. And again, the computer has a much better attention span than we do.
Yeah. Agreed. I think if you take that approach, right, and then you take that approach and level it up to all participants in the secondary market, to where we're all understanding that we trust, we know the systems behind this, we know the techniques and the methodologies behind this. We know how well they recognize documents and strip data, and we all have that level of confidence, and we can provide an audit trail of what's gone on. That's going to give a level of confidence to everybody, all the secondary market players. And then I think, to me, it's about watching the existing rates. What are the loan buyback rates? What are the defect rates, right? And to Mike's point, what he experienced, we should have, with the machines doing it, we should have lower rates. We should have much better performance than we did with just the humans and just that trust factor. Does that make sense?
Mm-hmm.
Well,
Absolutely.
it makes perfect sense. I mean, even in a buyback example, just reducing your exposure to potential buybacks through, better loan quality on the front end, and through your secondary market processes, you can potentially bake in more margin, or over time, even look at better segmentation of, particular loan products or pricing, and get, really strategic in that performance over time.
So when both originator and secondary market organizations have shared confidence in the quality of mortgage data, what will that mean for stakeholders in the mortgage industry?
I'll state the obvious, right? Time is money, right? What we're talking about is good data here, right? And we've investigated as an industry levels of automation. And I think what we've all figured out is that without good data, all we're doing is pushing problems faster through the origination process. With good data, it enables, reliable automation. And then with reliable automation, you can decrease turn times and lower your costs, right? So, and you've got lower costs, lower labor costs, lower dwell times. So I've got, my the interest on my warehouse line is a lot lower. And we all know that in the mortgage industry, there's not one area you can look to cut 25 or 35% of your production cost. It's I don't want to say death by 1,000 pinpricks, but we know there are a lot of different areas we have to look at, right? So you look at all these areas, and when you think about those two things in particular, it means faster time to cash. And I think that's really important for me, because as I look back on other projects, we've all done in the mortgage industry, we've kind of gone after this elusive productivity. Yeah, we know these systems are going to be more enable us to be more productive, But if we start from, am I going to get cash faster, and can I prove with metrics that, I have fewer days on my warehouse line, a lower defect rate, those are really meaningful, and you can prove them rapidly, and everybody's going to get confidence, and you'll reinvest, into the technology.
A good point. I think one thing that goes along with that one is, yeah, the reduced turn times is excellent, both on the originating side and on that kind of correspondent side for us. And that does definitely have a financial impact. I think the other factor that's worth mentioning on that one is from the employee perspective and the employer. A lot of those jobs that it's doing are the ones that aren't necessarily the fun jobs to do. But then they also allow that person, and Tom kind of touched on this earlier, to, I'll just say, like, level up. So instead of having someone where they're focused on check the USPS address validation, I use address because it's an easy example, against all the documents across all the things, take that off their plate and instead focus on more of the big picture item and what you're paying, hopefully, them for, which is more of that critical thinking. Okay, does this make sense? And I think, one, that helps a lot in employee retention if they're no longer doing the job that they just mentally check out for 4 hours. But two, lets them actually be happier at the job, but then play at that higher level. And I think one problem we have within our industry is there ends up being so much noise, so many little warnings, a little ding, is this worth investigating? Ding, is this worth investigating? That then sometimes you miss. Like, if you get a conditional approval with 47 conditions on it, you might miss like the really big one that's actually going to cause a non-purchase. Well, if now you have the computer checking most of those, and now you've got 2-3 things you're looking at, the person's actually going to pay attention to all 3 of those. So I think you do, in addition to have the faster turn time, you do get some of the better employee retention, but yeah, I think you also get lower non-purchases and problems where something was missed just because of that. I don't want to call it white noise, but non-purchase noise. How's that?
I like that. I mean, it's an extremely fair point too. We're getting dinged constantly by our devices, and you've got to have some kind of controls in place of, an overkill of notifications and becoming that white noise. It becomes overwhelming. You don't even know where to start. But I think in this question too, and shameless plug for True's ROI report, that I think at its core, kind of helped me level set too. And just when you think about your trusted data, and one of the key takeaways from is when you have bad data and you don't recognize that until later in your loan process, that's the larger of the potential cost, like throughout your organization, and more time with those files and just more inefficiencies. So you're able to improve your workflows the earlier you're able to incorporate and flow quality data throughout your loan files. But I think, more generally for this discussion, you could potentially have a better flexibility in your hedging strategy. Less loan defects can create the potential to have less compliance overhead costs. You've got the potential to have as much or as few portfolio loans as the lender prefers, kind of based on their strategy, because you've got less defects, less scratch and dent. And to Mike's point on the operational efficiency standpoint, once you can solve for one challenge, it allows you to turn your focus to other operational inefficiencies and leveraging data in different ways. And kind of that crawl, walk, run, almost like a building block approach to leveraging your data to kind of solve for gaps in your process.
Yeah. We talked about earlier, I think one of the things that we've seen a lot of success with is starting with post-closing QC. And, there's not a lot of insight into that today. I haven't seen a lot of, post-closing QC departments that have really insightful reports and can help with loan manufacturing defects, right? I think when you put a lot of automation and artificial intelligence and machine learning there and can help quantify the issues as they arrive, then you can do an economic analysis to say, what are the ones most impactful, right? What are the ones that are going to cause cash flow issues, buybacks, right? Suspense fees, and let's focus on those things. And then let's take, and I mentioned before, reinvesting in the technology, let's shift left. let's go into the origination process. And now, based on economic value of what we're finding in post-closing, right, which is our data, this insights from our data and our loans, let's make those corrections one by one, right? And then you're going to be really successful. Focus on 1, 2, 3 things at a time that are going to give the highest economic value and just keep reinvesting, and that's where the people come in, right? That's where the creativity or that's where you're going to be able to change your process, and the people are going to think, what you hired them for, problem solving, right? I know the mortgage industry. I know where to correct this. I know how to correct this. That's really satisfying.
I think that's a great way too, Devin, potentially for a lender to break down the barrier with their ops team involved in using AI and machine learning technologies. You get to be a part potentially of the problem solving process, because I imagine, is Mike, you probably have some firsthand perspective as you start to dig into this. It probably is somewhat overwhelming. It's like, you probably need to dedicate a full-time employee, if you could, just to do analysis of the data at your fingertips and going through kind of that analysis of prioritizing, from a cash flow perspective, what makes sense to dig into most from, solving for inefficiencies.
Absolutely. And quick note, just Sarah just asked in the chat, but asking it aloud. If people have questions, feel free to ask now, and we can gladly start hitting those too. I know Sarah's got a fun list of questions, but love to take some from people who are curious about this. For ourselves, we're still in that implementation phase. So we're still learning this, and we're still exploring what those opportunities are. And, again, you got to be sensitive to it that like computers are scary. AI is scary, but when you start talking to people and you start looking through, okay, what are the parts of your job that are not fun? What are the ones that you say for 10 a.m. after you had your second coffee for the day? And, let's start focusing on some of those and, take a look at like funding, for example. You get the 128-page closing package from title that hopefully is scanned on decent, but sometimes it comes in basically on sandpaper and sometimes it's a giant PDF. And like in our case, they need to pull the note and the deed and the closing disclosure out so they can have a final closing disclosure separate. That is not the highlight of their day. So great. If we just have Drew go through there, look at the closing package and extract those 3 out and put it out there, maybe that only saves them 5 minutes of opening the PDF, extracting them, saving them to their document, uploading it to Encompass in our case, putting them in the separate e-folder. But like, that's not 5 minutes they enjoy. And they've got, by the time they finish that, 2 more phone calls from title asking about funding status on another file. Like, I'd rather you go do that than do these little jobs. And that's where every department, when you start digging in, you find that there's the different things that they're going through, they're scanning, they're reviewing. That's not the fun part of their job. And that's, to me, the easy wins where you can go through, and then from there, you just take it to the next iteration. Well, can it do this? Can it check that? Answer's usually yes.
Way of it, yeah, of kind of getting your people invested in the process. And while 5 minutes per file may not seem much, I mean, quantify that over 100,000 units, and suddenly you start to create some, a lot of time savings, let alone cost savings.
There becomes like an almost emotional connection to it, because once you take that pain off of them, we had an Encompass SDK update that True AI was expecting that to be there, and we didn't have it. So True AI quit working on like a Thursday afternoon. I heard about it from every person possible. It was not working. So, that was a nice proof of concept of like, oh, do people like this? Oh, they let us know when it's not working.
Yeah, you may not always hear when they like it, but they'll certainly let you know when something's not working.
Yeah.
Devin, question for you. I'm curious from your perspective, working with a multitude of mortgage clients, maybe what the team at True is hearing, from clients, where they want to focus their attention, say next, after experiencing a positive use case, leveraging clean data. And, is there a consensus in that feedback out there across, or does it span across, different components of their mortgage processes?
I think there are 2 things, and there's a reason why I was, kind of beating post-close QC to death. We hear that a lot. And I think that there's a renewed interest in that because I do think it's, it's easy to understand. It's easy to calculate the savings. But the other thing is, hey, when I get that right, I need to move to, quote unquote, upfront underwriting. And how can I do that? But I can only do that with really good data, because there's a real wide understanding that, hey, I've tried this automation thing before, but I did it based on faulty data. And so what good was it, right? All it did was push garbage into my process faster. So those two themes are huge. Let's start this at the beginning of the process. Let's componentize underwriting and move as many components up front as possible, because there's this thought process that's really it's gonna help compress the timeframes. It's gonna lead to LO retention, right? Because loan officers want it, and it's gonna increase customer satisfaction, right? Because I get accurate answers faster.
At least from my side, and this one's way down the road, but there was a book I read one time called The Numerati, and it's all about how certain corporations are using big data and all this stuff they collect on us to predict us. And it was kind of creepy because they talked about how like a credit report company can predict when you're going to go on a trip before like ever seeing anything related to that. And one that it could even predict whether you were pregnant, even without ever knowing like anything about your like doctor's visits, anything else. I'm like, wow. So when you think about that kind of level that the credit card companies have figured out like a decade ago, you think about that and us, and it's like, okay, if we start getting all this data in and we can get it from all these sources and we can trust that data, and then you get like someone in here where you can start doing some of that analysis on that data. Are there certain characteristics of a loan that predict if that person's going to shop you halfway through, or that loan is going to fall out, or that you're going to get a non-purchase? I know on my side, I figured out, okay, if a client goes through a rescore on their credit reports, my chances of some sort of like early payment default goes up like 1,000%. But I never figured that out until I manually looked in my credit reporting and figured out, oh, they're going through rescores. Should be more careful about those. How many of those other little golden nuggets are there that we don't know yet because we don't pull in that data? So it's down the road, but once you can start pulling in all that different information and we start actually doing the analysis on it, to me, I'm really interested to see what we can do with it. I'm not going to be looking if they're pregnant for the reference.
I don't want to know what that forward predictor is.
Let's not. I would like to know if they're going to go on a trip, because that always seems to happen at closing.
I'll give you an example of that. Years ago, from a consumer direct perspective, with a lender that also did consumer loans, one of the things that we found, 70% of the time, somebody that bought a new house within 6 months bought what? Take a guess.
A new car?
A car. Yeah. So, they were ready and teed up. So there was always this concept of what trigger events happen as a result of the mortgage? What other life events, right? We know you're going to need homeowners insurance, but here's some other stats for you. 70%, there are 10 million life insurance policies taken out every single year. 70% of them say it's for the reason of debt protection. 40% of the 70%, so 2.8 million of those life insurance policies are taken out 6 months after a mortgage is originated. So, there's a lot of opportunity in financial services to identify these potential cross-sell opportunities and identify, to your point, Mike, the ideal customers who are going to be likely to be receptive to those offers, which is going to mean another level of product and another revenue stream for lenders.
It's a great point. I mean, not only like on the IMB side, where you can complement that with your CRM or marketing automation, but it's the cross-sell standpoint from a depository or credit union where you've got all these complementary product offerings. I mean, the quantification across your organization can just continue to expand.
Exactly. Are they afraid their mortgages are going to kill them?
Well, mortgage, doesn't that literally mean death pledge?
As long as we don't go back to making 40-year mortgages the norm.
Yeah.
Exactly.
Yeah. Mike, I have a quick question for you. How much of your potentially available data do you use at VIP, and how much do you trust before and after implementing True?
Ooh, that is a tough one. I will say very small percentages when you start thinking about it. Before we started working with True AI, I actually thought we were in a pretty good spot for that because we collect a lot of data. We do a lot of reporting on that data. We use Salesforce on our side to do all kinds of analyses on it and other things. We have a data person that helps us look at and uses a tool I don't even understand. And then when we started working with True and they showed the number of fields that they can collect, that's when I realized, oh no, I'm still kind of in the Stone Ages over here. And I do give them credit. The percentage of accuracy in that is way higher than I thought you guys would be. No offense against you at True, just again, I thought only fancy companies have this technology. So the fact that it was so high kind of blew my mind to the point where I do pretty much just trust it 100%. Devin could probably tell me I shouldn't, but that's where I'm at. But we still have a long way to go, if we're still being honest, before I take in all that information. Just, you still have manpower on our side. What are we going to do with it? And there's stuff that goes into that. So we're still on that journey, but way higher.
I liked what you said before, the crawl, walk, run analogy, So when you have the data, let's think of a business case. What do we want to do? And then let's start building models, before you say, hey, let's build this gigantic data model for the 8,000 data points that we can supply to you, right? Let's think of a business case on how we're going to use them and what data elements do we need, right? So keep it small, keep it laser focused, and let's prove that out. And then just, again, I'll use the term reinvest. Right, come up with another business case. What product do I want to find my ideal customer? And identify the key measures for success. Bring in that small data set, build the model, and execute on it. I like that approach a lot, Mike.
And it's one that we've been doing more. And when we first started working True, we thought it was all going to be just documents, splitting them up and analyzing. But then we've kind of realized, oh, there's more cases. Closing can do the closing package. Well, now we just before this, and I'll actually be emailing you guys on this, had the idea from one of our people of, hey, can we have it look at the homeowner's insurance and pull off that coverage? Because then that makes that a super simple thing of how much coverage is on the insurance? What is their deductible? Does that fall into our guidelines? That's going to take my Encompass programmer like 15 minutes to program the logic behind it. If we can just scrape it out of there, and the answer is, yeah, we can. And then now we're not finding until our, docs department, theoretically, our processors are catching that, but we go back to the doing a million things. Right when you're drawing up docs, or even when you're processing, that's not when you want to find out if you got enough insurance coverage and need to go back. Like, let's figure it out the day it comes in. So that's where it's just constantly growing and expanding in that way.
Do you often find it out at the right point in time, or is that something that's more downstream after you've originated the loan?
I think most things we thankfully discovered during the loan process, knocking on wood over here. But the goal is always sooner versus later. We try to do a pretty heavy upfront review on our side, just so you can catch things day 2 versus day 22, because going back to the client on something or the agents on something that further in always just causes much more customer service problems.
Fantastic, guys. Well, before we wrap today, I do want to throw out a plug. If you enjoyed the discussion on this webinar, we are collaborating with True again in 2 weeks from now on Wednesday, May the 3rd at 4 p.m. Eastern, 1 p.m. I almost said specific. Wow. For another TNC
time.
Right? It is spot on. But it's a great session. The registration for it is in the chat. It's called Clean Up with Clean Data, Why Data Quality is the Key to Transforming Productivity and Business Elasticity in Mortgage Origination. So we'll have Sean Carnes from Arvest Bank in there for that. Bob Noble from True joining, and I have the pleasure of sitting in on that discussion as well. So highly encourage you guys to join us 2 weeks for that.
Elasticity.
I like that.
Thank you guys so much again for joining. For anyone that's looking forward or might have missed a bit of the conversation, we will be sending out a follow-up email with a link to the recording on YouTube as well as to our podcast as well. And if anyone does have any questions after this webinar, please let myself know and I can get those questions over to Devin or Mike or Tom.
Preferably Devin or Mike. You don't want Mike.
Yeah.
Thanks very much.
Thank you guys. Have a good day.
Have a good
Bye-bye.
one, everybody.